You're listening to chartingwealth.com for Thursday, the 10th of March, 2016. We're already pushing through 2016. Amazing. Well, we always start with IYY, which is a total market index fund, an exchange-traded fund. And what do we see going on? Well, we've had a bunch of up days. We have our first red two-day candle that has finished forming on the 9th. And what do we have? Well, we're still barely above the two-day trend line on the two-day trend. We have the Bollinger Bands still well above any of the movement. We have the MACD and the signal line still far apart. We do see the derivative oscillator losing a little bit of speed as of this latest two-day candle. And remember, the market rolled over going up all the way back on the 16th of February. So there's been a lot of up movement for quite some time. Now, if we drop back to our 4-hour chart, see what's been going on throughout the day. Lots of indecision, basically two dojis for the day. The market technically up 0.46%, but in the morning it was a doji. In the afternoon, pretty much a doji, a little up. The derivative oscillator has dropped off down. So if you had to guess where things are going as far as the momentum and the speed, as far as the oscillator goes, it is down. And of course, we're just sort of sliding sideways. So what are we looking for to happen? Well, what we are is we're still in a confirmed up move on the big chart, down move on the small chart. Going to see if it rotates back over and starts moving back up again. If it is, that's going to be a position where we want to jump in and ride that up movement. If indeed it digests some losses and then starts moving up, crossing over on our 4-hour chart. We're seeing the derivative oscillator heat up going down. We're not seeing that happen yet. So we'll continue to pay attention. Now that's where we are on the total market, still above the two-day trend line. Now if we drop back to our 2-hour chart and we take a look at SPY, that was up a little more than the total market. The S&P 500, as represented by SPY, was up 0.51% for the day, still above the two-day trend line. It is a red open box as it was back on the 24th, although the down movement as depicted by this box is not as much as it was when the market sort of digested gains for a couple of days. Now we still are well above, as I said, the two-day trend line. If we, and the MACD and the signal line are still separated, the derivative oscillators moved off a little bit. Now, if we drop back to the 4-hour chart, take a look at that. What do we see? Well, it's also sliding sideways. Has crossed over going down. See if we get a cross back going up in the same direction as the large chart. That would be a signal for us to consider getting into the market on an up move. Hasn't happened yet. We're watching it. However, we're also paying attention to how much the derivative oscillator has fallen off, meaning that that oscillation has slowed to the point that it switched over into the negative. So we'll continue to pay attention to that. Now, let's go back out to the two-day chart. We're going to go to our last market index, and that is the Qs. What is the Qs? Well, it's the NASDAQ 100. It has already broken our prior established two-day trend line. We had a red candle for the 2 days on the 7th of March, and now we have and that was a red open candle. Now we have a strong red down candle. When I say strong red, it's a filled in box. That's the way that the Henki and Aishi line works, or Ashi, Henki and Ashi lines, candlestick type of trading patterns work. So we have a strong down move. The Q itself was up 0.64%, but we're looking at a two-day candle there, so it did recover some over the course of the day. Derivative oscillators moved over. We still have a big separation, though, between the MACD and the signal line. Now, if we drop back to the 4-hour chart, what do we see going on? Well, we see that the 4-hour chart has already cut through the two-day trend line on the NASDAQ 100, and it slid sideways over the course of the day. Now, if indeed we do see the MACD cross back over the signal line going up, that will be a signal for us to jump back in a continuing to rise market. We haven't seen that happen yet. We're going to watch for that. That may not happen. If it doesn't happen, then we see what happens, and if the market rolls over and goes down hard. Hasn't done that yet either. We're going to pay attention. That's what we're looking for. We're looking for a good buy-in point. So that is where we are on our three indexes: the total market, the S&P 500, and the NASDAQ 100. Now, lastly, we're going to do what we always do, and that is go to gold. What is gold doing? Well, gold closed a down candle. Down candle still well within the prior up movement on the 2-day candle, still above the 2-day trend line, although it does appear the MACD and the signal line are getting closer. We also have the derivative oscillator in the negative, barely. If we look at our 4-hour intraday or half-day chart, what do we see going on? Well, crossed over on that 4-day chart going down back on the morning of the 9th, actually, and we've seen the derivative oscillator continue. That was in the afternoon, I'm sorry. It started, well, crossed over technically in the morning, going down on the 9th before noon, and in the afternoon moved up a little bit, but for the day, gold was down 0.82%. So we're in a confirmed down move on the 4-hour chart. We are waiting to see if indeed gold's going to track back up and give us another buy-in point for an up move on gold. Remember, gold is still in a confirmed up move, although it's getting closer on that 2-day chart with the short-term chart in the negative. So that is where we are as we enter the market on Thursday, the 10th of March. How is the week going to end up? Well, it's anybody's game to make at this point, but we do know what our large charts are telling us, and we're waiting to see, particularly on the indexes, if our small charts are going to rotate around and go back in that direction. They may not happen before the end of the week. Same with gold, actually, although gold is getting much tighter between the MACD and the signal line and a possible crossover going down on the big chart, but we haven't seen that happen yet either. That's where we are. We'd love to hear from you. If you haven't already signed up and aren't already getting our daily reviews each and every day, you can go to chartingwealth.com and give us your first name and email address, and we will send it to you. You'll also receive, free of charge, is just a thank you from us. We will send you how to read a stock chart, the link to our video, and also the charting layout that we use at freestockcharts.com. The operative word there being free stock charts. Now, all you have to do to get any of those and all of those things is go to chartingwealth.com, sign up for our daily newsletter. Thank you so much. We'd love to hear from you. Follow us Facebook, Twitter, Instagram, YouTube, you name it. We're there, and we like to help. God bless. Wish you the best as you learn to trade and invest.